Actually, what happened is after all of the chaos of the great financial crisis, the thing that we don't talk about is what we really did was keep running the same, if not more risk. We just took it off balance sheet. So the banks were able to structure business lines to work with these hedge funds. And these hedge funds, in turn, were able to show over time that they're so tightly managed that there are no black swan events that could happen.
The U.S. economy contracted 1.6% in the first quarter of 2022 and 0.9% in the second quarter, which is a recession. National Bureau of Economic Research scientists found no other factors that indicate a recession. The White House also rejected a recession. Treasury Secretary Janet Yellen and President Biden described the economic climate as remarkable when roughly 400,000 jobs are produced each month without a recession. Yellen claims this economy is not in recession. Despite the Fed's vigorous rate hike campaign, Yellen and the Biden administration maintained that the U.S. economy was strong and resilient in the months and year that followed. They often highlighted job data, low unemployment, solid consumer spending, and household savings as evidence of Yellen's a recession is a broad-based weakness in the economy. Transitional rather than recessionary economy, the tail lasted for months until July's unexpectedly low job data from the Bureau of Labor ended it last week. Billionaire investor Chamath Palihapitiya and other podcast guests believe the U.S. economy is entering a recession. Chamath venture capitalist David Sachs and O'Hall CEO David Friedberg predicted grim times for the U.S. economy before the year closes.
Citadel runs about $50 billion, and they have extremely precise risk management systems. They're the best in the business. But as a result of that, they are so systematically important to make the financial machinery run properly that as they're inspected and as they prove that they have very good risk management, they're allowed to lever up to incredible levels, 15, 16, 17 times. So I think that Citadel, with the 50 billion of capital that investors have given them, is probably running $1 trillion on a daily basis in the markets. Renaissance Technologies, same situation. Millennium, same situation. A bunch of these funds that sit inside of the large banks, same situation. So when you add it all up, you're probably talking about a few $100 billion of notional capital. That's enormously levered. That's what causes that sensation, as Sachs said, that things are rickety.
So should we have more increased regulation or increased scrutiny on this, Chamath? You've talked about it before when we had some of these hedge funds flip, and we talked about maybe some regulation. Yeah.
We have a lot of regulation on banks. Essentially, what happened is after all of the chaos of the great financial crisis, the thing that we don't talk about is what we really did was keep running the same, if not more risk. We just took it off balance sheet. So the banks were able to structure business lines to work with these hedge funds. And these hedge funds, in turn, were able to show over time that they're so tightly managed that there are no black swan events that could happen, that they can run highly levered. So I think we are in this moment where there'll be these fissures from time to time. So here's this Bill Huang, that's an example. The carry trade is another example. There have been examples a couple times a year, but at some point, these folks will have taken too much risk. And we'll look back on it and we'll think that hedge funds should probably have been more regulated than they are with respect to their leverage ratios, not with respect to their strategies. Low-key recession. So I think that we're going to probably go through a couple of very difficult revisions of old data. The thing to remember about non-farm payrolls isn't as much what the number is, but if you actually look to the number of times it then gets revised, the reality is that these things get revised constantly. And right now we're in this trend where we are overestimating and revising down. Sachs mentioned this, that was the same with GDP. So we are, I think, in a tough situation. And then what you're seeing is folks that run very cyclical businesses are telling us in very plain spoken English that demand isn't there. So the one that was interesting this past week, Jason, you mentioned millennials, but like Airbnb, where you think all these young people are running around YOLOing whatever cash they have, Airbnb had a massive warning on demand. So when I think the excess capital, whether it's the stimmy check or what have you, has been exhausted, you're now starting to see it bear out in these cyclical businesses. I don't think the demand is there. I think we're in a recession. It probably becomes more obvious in Q3 and Q4. And so Powell's going to have to cut. The question is, will he overreact to the pressure and cut 75 to 100 versus 25 and take it slow?
According to the Bureau of Labor Statistics' most recent data, the U.S. economy added just 114,000 jobs in July, while the unemployment rate rose from 4.1% in June to 4.3% in July, its highest level since 2021. The S rule, which stipulates that a recession is developing when the 3-month average unemployment rate increases by more than half a percentage point within a year, has been activated by this unexpected spike in unemployment. The SAM rule has generally been correct, but Fed data shows that the current S rule reading is up 0.53% from 0.43% in June. I'm not concerned about the fact that we are in a recession right now. The American economist said after the rule was put into effect that this time things might actually change. Due to changes in the unemployment rate, which forms the basis of the S rule, brought on by labor shortages, people quitting the workforce, and recent immigration, the SAM rule might not give us the same information as it did in the past. Brian Moynihan, the CEO of Bank of America, agrees that the U.S. economy is not in a recession and won't be in one anytime soon. Brian commended us President Joe Biden and the Federal Reserve in an interview with CBS on Sunday for effectively bringing the U.S. economy back to a soft landing after inflation hit multi-decade highs in 2012.2. For a variety of reasons, the Allen podcast crew disagrees with these viewpoints.
Matt and I, when we're here in Portofino, we go in the morning to the fishmonger and we'll buy, fish for the family. It is unbelievably expensive. And, we always think to ourselves, how is it possible that folks can actually choose to eat healthy and local if they want to? It's next
What was the
to
branzino?
impossible.
What was the whole fish? Tell us.
If you
Branzino
want to
index.
have like locally caught sole, it's like 48 euros a kilogram.
Wow.
Okay. And it's expensive. And
wow.
it's
It feels
expensive
like
for
more
all
than a
kinds
restaurant.
So to feed a family of 7, which is what we are, you'll have to spend, $150, $200. It's not sustainable. It's not something that makes sense for enough people anymore, because that probably used to be $40 or $30. But Freeberg is right. Like, we're in a real serious problem because it's like these systems have remained the way that they have been for a very long time. And while other industries like the tech industry have captured all these incredible efficiencies, but the problem is that then these other industries are what supports everyday people's everyday lives. And in the absence of a way to actually reduce cost and improve quality, you end up where we are today. And I don't think that that's sustainable. The China thing could have impacted it, but because he also sold a lot of BYD, which they've owned since 2008, I think. So, and that's a Chinese EV company. And so it could be just that could have played a part. To be honest, I don't know.
So wait, you're saying China dependency. Both of those have a China dependency. So he maybe felt the overall portfolio had too much China dependency.
Maybe, yeah. I could buy that. That seems like reasonably logical. I think the thing to remember, though, is that these decisions, I think, have been stewing for at least a couple quarters. Remember, that letter that he writes was not written yesterday, right? That was being drafted months and months ago. So these decisions were made, or even longer. So I think these decisions were made a while back. Another reason, if we're going to play kind of conspiracy theorists, is after the death of Charlie Munger, maybe what he's starting to do is consolidate the book so that it can transition elegantly to Greg Abel when Buffett passes away. And so that could be another
thing. Let me unpack
that
for a second. So when you say that, you're saying he wants to hand it off with less risk in it. So dependency on one stock would be risk. A dependency on China would be risk. So he wants to make it really clean so the handoff is smoother. He wants to hand off a very organized book.
Or maybe he and Greg Abel have already talked about the kind of risk book that they want over these next 5 to 10 years. And it reflects a discussion about what the incoming CEO wants. There could be all kinds of reasons why. I don't really know. I just think that Apple, just back to Friedberg's core thesis, I agree with many of his general points. I'm not sure that they affected the Berkshire strategy, but Apple is sort of a little bit wayward. It is a company with an effective and unregulated monopoly or duopoly that doesn't really know what to do. And I think that that's the biggest problem with that company. And that's independent of Buffett selling now or selling a year from now or having not sold a year before.
Once you're regulated, you know what the prices are, you know what you can do, you know where you can go, and all that risk is off the table. That's what is a feature of all of those other monopolies he owns, is that the government has a role in it. So it's a highly predictable business.
By the way, and you mentioned the Google thing, but this clearly was not part of his calculus. I think he just got very lucky. But if you're holding Apple today, I think you have to take the $20 billion that Google pays you every year, which comes in at 99% margin, and you should probably sensitize the value of Apple for not having that 20 billion if this antitrust ruling against Google stands.
Yeah.
That alone could be worth upwards of $500 billion to $1 trillion, depending on what multiple you want to put on that 20.
Despite rising interest rates, investors are growing more optimistic that the world economy is on track for a soft landing, where inflation decreases without causing a major slowdown in economic activity, according to Bank of America's August Global Fund Manager Survey, which was made public on Wednesday. The most percentage since May 2023, 76% of respondents think that a soft landing is the most likely scenario for the world economy within the next 12 months. The highest level of confidence in dropping rates in the last 24 years was demonstrated by the astonishing 93% of investors who forecast lower short-term rates during the next 12 months. At the upcoming FOMC meeting in September, do you believe the Fed will declare a rate cut? What impact will these actions have on asset values in the U.S. economy? Kindly leave your remarks in the space provided below. We appreciate you watching, and if you like this video, please turn on post alerts for future videos like this one and subscribe to the channel.